Welcome back. Well, let's focus on Anup Engineering then. They delivered their first quarter numbers. To understand what's the way ahead from here on, we have Mr. Punit Lalbhai, who is the Vice Chairman of Anup Engineering. Hi, Punit. Good morning and good to see you in. Well, tell us about, how is the order book looking? I'm looking at the absolute number. It's come down to around 810 crores. So a bit of a decline on a sequential basis. What is the order inflow you're factoring in for this year? And also split it up for us between exports as well as domestic business.
Sure. I think the order book is extremely strong. As of now, the order book for the entire year is full. Of course, this being a project business, there will be some lumpiness in the order inflow. As far as the overall market conditions go, the Indian market is a little bit slow at the moment because of the election period and no new projects being taking off in this phase. However, the export market is extremely strong, and we believe that the order book to come will look extremely strong. So this year is completely full. Last year we ended at about 50%, close to 50% exports. This year also we are looking at perhaps bettering that number in terms of exports.
50% exports, you're looking to better that number. You said that your order inflows are lumpy because of the nature of your business. So which is why there was not much that came in the first quarter, also impacted by the elections. So let's talk about another way to look at your business going forward, which is your bid pipeline. In both your export and domestic markets, if you could tell us over the next couple of months, like next couple of quarters, what are the bids that you are making? And what is your order book right now? What does it stand at? And what are you anticipating to close in this year in terms of inflows?
So I think the way to look at this business is that we are attempting to grow at 25% year on year. So last year we closed at around 550. This year the target will be to cross 700, and next year the target would be to grow 25% from there on. We've also added Naval Engineers as an acquisition, so that should add another 60 crores to the overall entity. So if I were to give a guidance, we should be at that 750 mark by the end of this year and look to grow 25% of the time.
All right, we missed that number on the inorganic growth. Mabel, how much will that contribute?
50 to 60 crores this year.
50 to 60 crores this year. So 700 plus the 50 crores, that's how you're accounting for it? Or it's 750 plus the 50 crores?
No, 700 plus the 50 crores.
Plus
so
50.
We should be ending the year at 7.
And Mabel, can be scaled up from this 50-60 crores of annual revenue, say in the next 3 years? What does it go to?
So we are targeting that entire campus should be able to give us 150 to 200 crores over the next 3 years.
Oh, the next, okay, so from around 50-60 crores, you're saying it goes to 150 to 200 crores. Oh, that's quite interesting. Give us a number on the margin guidance as well. What should the consolidated margins look like? And if you can throw some color on what's Mabel's margins, is it lower? If yes, do you see it scaling up?
So Mabel focuses more on higher metallurgy. It's a facility that does smaller size vessels, but higher metallurgy, so the margin structurally is lower, so the return on capital employed would be very similar. The overall margin for the group, we always guide as 20% plus. That we look to have a consolidated margin of 20% plus.
All right, you will do 20% plus margins. That's what you've guided for. Mabel ROCE will be similar to what your current business is. I just wanted your view on further capacity enhancement, because you've extended the PS Bay at Kheda that would be commissioned, I think, sometime right now, anytime in the very near future. How much can that add to your revenues? What's the ramp-up schedule here? And what are the further capex plans that you have post this?
So I think factoring in this year's capex plans, overall, including Kheda, Orderbook and Naval, we have reached about 1,000 crore top line.
1,000 crore top line by when?
I mean, we will, of course, the growth will be this 25% rate. We also need to manage, the execution of the growth. But the capacity addition is capable of taking us to 1,000 crores now. So that will come over perhaps 2 years if we just add 25% to this year's ended guidance. It will take us 2 years.
Got it. 2.5 years, new capacity, including Mabel, will give you close to 1,000 crores additional revenue. Mabel, you just said that at peak could be about 150, 200 crores in terms of revenue. So one assumes that maybe the PSP at Kera would give you around 750 to 800 crores as well. Thanks a lot. It's been a pleasure speaking with you. We hold you on to those numbers and we'll keep connecting with you at the end of each quarter to get an update on what business is looking like. That's about Anup Engineering. Take a short break, come back, tell you about the markets and a lot of individual stocks which are buzzing around.